So welcome back, everybody. We're running into some technical difficulties. I tried to buy a new camera, and it was the wrong camera to buy. I'll just say that. So we're back to my old camera. But anyway, running into a little bit. So we're live here. Wendy, welcome. Glad to have you back. Another week of money moves. Did you make a lot of money moves this week?
Always.
There you go. There you go. I love it. Well, today we're going to talk about something that the gurus out there have their opinions and stuff like that. But it's life insurance. You know, what's going on with life insurance? Do you really need it? Is it all about, oh, I just need enough to bury me, or do I need a bunch, or do I need permanent? Do I need temporary? What about that whole life stuff? What about term? So it's one of those things that there's a lot of information out there, and there's a lot of bad information. So we're going to break it down for you on really what's going on with life insurance. Do you need it? Why do you need it? And how do you actually use it? Right. So that's one of the things that in kind of looking at all these different options, we're going to talk about that today. So do us a favor, click that little subscribe button, share it with your friends too, and let them know, hey, if you've been curious about life insurance, John and Wendy are about to talk on our money moves, and we'll get started in just a few seconds. All right. And I'm sure you guys can hear some ticking and some pecking and some pounding back in the background. That's having some work done on our studios for our new advances in technology that we're putting in. Actually, I'm having some tile replaced downstairs, and that's part of the benefit of having your studio at home. So anyway, it is what it is. So let's talk about this, Wendy. You have life insurance. I have life insurance. Most people do. What are some of the questions you hear about it, or some of the challenges or misconceptions or whatever about life insurance and having it?
Well, I grew up in Dave Ramsey country. Can I say that?
Yeah.
And basically just heard, buy term, invest the rest, and eventually become self-insured. So have had life insurance through the years, like a financial advisor, hey, here's what you need. And I didn't really know why I needed that much or what it covered. And was kind of based on my salary, and that was it. And preparing for death. And until I started working with you, I didn't know anything beyond that. So there's not a lot of education out there.
Yeah, no, there's not. And that's one of the things that's what this video is going to be about, is really kind of, hey, let's just break it down. Let's look at it simply. And what is it for? So life insurance is something that, you think of it like this. Its job is to step in when you step out, right? Its job is to step in and take care of your family, your children, your, and this is a basic need, right? So they don't have to lose the house or whatever the case may be when you step out. Now, back in the day, everybody had permanent life insurance. And I'm talking, like back in the day, I'm talking like the early 1900s. I mean, life insurance has been around since the 1700s. Okay. So it's been a part of wealth, financial planning. And for a large portion of time, that was the mainstream of building wealth, other than savings and whatnot. But along came a guy by the name of A.L. Williams back in the 60s and 70s. Right. And great guy. He's the one that really got that whole thing going on buy term and invest the rest. And at the time, it was, you either had the choice of whole life, which is a fixed permanent strategy, right? But it's a fixed rate of return. Okay. And they used to pay pretty good, but like everything changes, right? And that was it. And so what happened is his father passed away, and they had a whole life policy, a small amount. And for that same price, he could have had so much more term insurance. Okay. So that's where he got fired up. And there's a whole company out there now, I'm not going to go into it, that's their whole thing: buy term and invest the rest. The problem is that's only one small portion of the total solution, right?
Right.
And nobody ever invests the rest. They go out and buy a car, this, that, or the other. So it's outdated advice, right? That, quite frankly, unless you're a pretty savvy person and you're building large amounts of wealth, it doesn't really work, right? because most people end up, and what happens, so let's just break it down. What kind of insurances, life insurances are there? And how do you come up with the right amount for you, right? And what blend should you have? Because you should have a blend, right?
Right.
So there's two types of life insurance out there. Okay. Temporary, also known as term, right? And then permanent, not whole, but permanent.
Right.
Whole is a type of permanent insurance. So what do I mean by that? Well, term lasts for a term, right? You can do 5-year, 10-year, 15, 20, 25, 30. I've even seen some in other countries where it's 40 and 50-year term. But you're gonna pay for that, right? And so it's one of those things that you have that term policy, but once that term policy expires, it's over. It's done. If you didn't die, guess what? All of that money goes for nothing. Okay. Now, you look
Most
at
of them do, right? Most of them, right? I think you gave me a stat before of how much term life insurance actually pays out.
It's less than 2%, right? I don't have the exact amount in, but it's less than 2% actually pays out on that death benefit, because they price it accordingly. Their actuaries actually look, okay, we know that based on this person, they're 30 years old. The odds of them actually dying before the next 20, 30 years, pretty slim. Okay. So you end up spending all that money, and if you're a smoker, you pay more for it and things like that. But most term policies, the vast majority of them never pay out. Okay. Then you've got a permanent policy, which, it's like, okay, well, permanent policy, why do I need insurance, when I'm down, 60, 70 years old? There's a lot of different ways you can use it. A lot of people, wealthy people use it for generational wealth building, right? Legacy building. You can also use it for key employees, things like that. So there's a lot of different things you can use it for. But looking at the different kinds of permanent policy, those permanent policies go out to age 120. Okay. Now, what that does not mean is you're paying a premium until age 120, right? You can stop paying your premium at age 65, 60, whatever you want to set it up as. And you may pay a single lump sum premium and never pay again, right? So, that's where a lot of middle class get confused, because they think like term, I got to get as much insurance as I can for the least amount of dollar, and then I'm going to be covered. Well, the problem with having a single strategy, and again, it's all about diversification. We've talked about diversifying your portfolio on this show. We've talked about diversifying your tax strategy on this show. We've talked about diversifying your income in this show. You need to diversify your life insurance strategy too. Okay. And it's not a question of if you need it or not. Okay. You do. The question then becomes, okay, how much and what type?
Right.
All right. So if you've got any kind of responsibilities whatsoever, you have any kind of bills or anything like that, you need life insurance to cover all that. Because again, it steps in when you step out and takes care of all that. Okay. So the question then becomes, okay, what type do I need and how much do I need? So let's go on that. How much do I need first? Okay. There's a very simple formula called DIME, DIME. Okay. Again, this is like you have a job, life insurance has a job to do. This is the job it does. So you've got a spouse, right? Or a partner, call it whatever you want, right? So when you pass away, you want to make sure all those debts are paid off, so you don't leave any debts behind. You want income replacement. I talk to a lot of people, they have what's called final expense, which is another permanent policy, right? It's called final expense, that they cover just that's all I needed, just enough to bury me. Okay, well, let's do the math on that. So you're, 35, you've got 2 kids, you're making 80 grand a year, and you've got a mortgage like most people do. Unfortunately, you can't pay cash for your mortgage, unlike some gurus out there tell you to pay cash for everything, which is total BS. So, you've got the final expenses, and let's not forget about the education. So D stands for debts. I stands for income replacement, usually 5 to 10 years. If you've got a young family, 10 years. If they're graduated and, college and stuff like that, you can do 5 to 7 years, somewhere in there, but minimum of 5, no more than 10, unless you're doing some kind of wealth strategy. So that's the I, income replacement. Mortgage, we want the mortgage to be paid off. And I want people to think about that for a minute, right? So let's say, Wendy, that, God forbid, you're married, got kids in the house, and, like most people, it's a dual income. Mm-hmm. One of those incomes goes away literally overnight. What's going to happen with that mortgage?
Yeah, most people are going to lose their house.
Yeah, they're going to lose their house. They're going to have to sell it. So when you do that, are you going to move into the same cost of a house? You're going to move into a cheaper neighborhood, things like that.
Yeah, you're going to downsize.
Okay, so what happens to your kid's school?
New school,
New
most likely.
school, new friends, right? So your kids are going to go through a traumatic experience of losing mom or dad. Oh, then let's go ahead and pull out all the familiar stuff that they're familiar with and yank them out of their school and this, that, and the other. And that's something that a lot of people don't think about,
Hmm.
right?
Yep. Yep.
And then we go to the E stands for final expense. I would say most people 15,000 is going to cover it. Well, it's not going to be that expensive. I'm getting cremated, whatever, right? 15,000 is going to cover it. 10,000, whatever the case may be. It's small in the big scheme of things. And then you look at, the educational expense. If you have young children, you want them to go to college. Last time I checked, it wasn't free, right? So you want to have some money set aside for that. And then, again, just planning all that. So we add all that up, and most people are severely underinsured.
Mhm.
Okay. And again, I apologize for the hammering in the background. Most people are severely underinsured, but I have seen some where they're severely overinsured,
Insured, yeah.
where they ran into, somebody who sold them on, hey, this is what you need. And that's the thing, folks. Educate yourself. You can do the formula yourself. DIME, dime, right? Any other comments on that piece?
No, I mean, I love it because I think it's simple, and it's anytime we sit down with clients and walk through that, they're like, we ask, does that make sense? Yep, makes perfect sense. And
Yeah.
like, there's never any pushback. And I know with me, when I first had a policy written, like none of that was explained. It was just some random number thrown out there, and this is what you should have. And you're like, okay, I guess I trust you.
Yeah. Well, and then and you look at it, and it was probably all set up as term. I know the first guy I met with, it was a term policy, and it's like, okay, and here it is, you pay it. And it's like, okay, well, what happens if it expires? And this is now we're going to shift into: do I need term? Do I need permanent? Do I need one or the other? Do I need both? Why would you ever want to have permanent? Well, I guess why wouldn't you want to have just term, like the gurus? And I used air quotes out there because I almost want to throw up when I say that. But anyway, these experts out there say, oh, you just need term and only term. Okay. Well, let's do that. Let's kind of walk through that scenario. So I'm 30 years old, right? I'm not, but let's pretend I am 30 years old. I go out and get a 30-year term policy. Okay. So now I'm 60.
Mm-hmm.
Okay. Now I still probably need some insurance.
Mm-hmm.
Final expense insurance. Most people in middle America, right? They're not debt free by age 60.
Right.
Or if they are, they still have kids, they still have a need for some type of insurance. So, the guru solution, well, just go get more term insurance. Okay. At 60 years old, getting a term policy, you're going to pay through the nose for it.
Yeah.
Okay. Not to mention the last time I looked at stats, and I look at them occasionally, most people don't get healthier as they get older. They get sicker, right?
Yeah.
All those bad choices in life start catching up to you. Okay.
Nope.
Some health issues pop up that, hey, guess what? You don't even freaking qualify for insurance anymore.
Mm-hmm.
So now what do you do? But such and such said. This is why you need an underlying, I call it a foundation of permanent insurance. We go through what's called an insurance curve, an insurance need curve, right? When you're young, starting a family up, you've usually got a lot of debts. You're financing the house, financing the cars. You've got kids in school, making ends meet, right? That's why that big insurance number is there on the dime formula. Okay. You may need 1 million, 1.5 million. I don't know what your formula is. Do it, for yourself and kind of figure it out. But as you get older in life, hopefully your mortgage is paid off, right?
Right.
Hopefully you're not financing cars and you don't have a bunch of student loans left. You don't have a bunch of debt left. So you don't need all that insurance. So you need a big buffer of term insurance, but that underlying foundation, whether it's 250, $500,000, or whether the case is for you, case by case, that's what you need to do. That's your foundation, right?
Yeah.
Anything to add to that?
Well, and the permanent insurance, I mean, I just lost a grandparent, right? And her kids are paying out of pocket to get everything covered. Reverse mortgage, and there's just so many different things and expenses that come up, and everybody's paying out of pocket for it because she had no insurance. When her husband passed away, my grandfather, there was no insurance. So the family had to chip in for the funeral and things like that. So there's just, I think it makes sense to have that permanent foundation always. And even if, for me, I think about, I would like for my kids, no matter how old I am when I pass, to have something, or my grandkids to have something, and so I read a book you actually recommended. We may have even read it in book club, but talking about like even using the strategy of life insurance and permanent life insurance to help make the generations after you wealthier, because you can leave it for them, right? So
Well, yeah, and especially, if you've got like land, assets like that, and you want to pass that on to your kids and things like that, you want to have a generational wealth strategy to minimize the impact of probate or avoid it altogether. You're going to have taxes, and that's where you see a lot of family farms being cut up because they've got to pay taxes on that stuff, and that's where insurance can help offset that too. But that permanent piece, is permanent. Like I said, you don't have to pay the premium the entire time, but it goes out to typically age 120. Okay. If you're living to 120, you don't need to worry about insurance because everybody wants to know what the hell you're doing. You're writing a book, making millions off that. Right. Mm-hmm. But for the rest of us, that way there's something there that's literally there to the end of your life. Mm-hmm. Okay. And you can use it for generational wealth and, all kinds of different things. You can use it to actually build money. So that's the other thing. A lot of insurance gurus out there are talking about, hey, you want to build wealth, you want to use whole life, that you'll hear terms like family bank, infinite banking, and stuff like that. And, it really boils down to how do you want to earn earn interest, if you will. Do you want a fixed account, like a savings account, something like that? Or do you want a market driven account, an indexed account or something like that? So you've got whole life. Whole life is not the only permanent strategy out there. There's universal life, there's index universal life. There's guaranteed universal life. I mean, there's all kinds of different strategies out there. That's why you want to talk to somebody who knows what they're doing and is licensed in acting in a fiduciary standpoint to walk you through all of that and make sure you understand all your different choices. That's why we do what we do here at Black Swan Money and the Turning Point Group. Is it's all about the education. It's one thing, Wendy, for us to tell somebody you need to do this. It's another thing to explain why they need to do it and the mechanics behind it.
Well, and then everyone's a unique individual too. And so that's why we do personal plans for people to look at their situation. And, one thing that, I did in the past when my kids were little, I did permanent policies for them when they were young, because I know that if they get sick, God forbid, like cancer or something happens and they become uninsurable, if they already had a permanent policy in place, then they have that. And so, every situation needs to be looked at, and there is no one size fits all.
No, there's not. And that's the thing, you hear somebody listens to a radio show, they go out and buy the latest book and it says, this is what you need to do. Okay. That is a one size fits all approach, folks. And that will not get you to where you want to go to. It may be good for the short term, temporarily, and I guess it's better than nothing. But if you really want to step up your game and build wealth, not just, you need to have somebody who's looking at all aspects of your wealth strategy, right? And building out something that diversifies every bit of it. That's why Turning Point Group, we go through 6 different steps, not one. So if you need somebody, talk to us. But if you don't talk to us, that's fine too. Talk to somebody, but make sure that they're putting you in a diversified strategy across the board. Mm-hmm. So hopefully that helped a little bit. Number one, do you need life insurance? Yes. Especially if you've got a family, if you've got kids, and that 100,000 policy at work, that's not going to get it, right? Mm-hmm. That is not going to get it. You use the DIME formula, and keep in mind, when you leave that job, you lose that insurance. Yep. Okay. So own something of your own. Stop borrowing it from your company. Use that as gravy, right? The second thing is have a hybrid approach. Okay. Use a term and permanent strategy. So that way you've got a large amount of coverage as cheap as possible during those formative years, but then it goes down to your foundation and carries you through the end of life. And that way you can pass on generational wealth. Your kids aren't passing the hat and talking about, damn, dad was cheap and didn't take care of this. What the hell? Because they will. Yep. And then thirdly, have a diversified strategy and look to get the biggest bang for the buck. It's not all about how much, how cheap. What can it do for me? Look at the value versus the cost. Mm-hmm. Look at the value versus the cost, and look at the company too. Is it a good company? Because a lot of those companies fight back when they have to stroke those checks out. Mm-hmm. Something called a Comdex score, which we'll talk about that in another day. So hopefully I didn't muddy the water for everybody. I think we gave a good explanation. Went a little longer today because I think this is important. But again, thanks everybody for coming out. if you need some help on life insurance or just general wealth strategies, reach out to us. You can reach out to Wendy. You see her there, or come out johncleaver.com. We'd love to help you out. I'd love to hear your reaction in the comments below too. If you're on YouTube or one of the other, make a comment on what you got out of this. And if you did get something out of this, give us a thumbs up, show some love, and be sure to share the video. So everybody have a great day. Wendy, it was good talking to you again, and we'll see you next week on another Money Moves.
Bye-bye.